Good evening, everybody. This is James with 77 Financial Group. You're listening to 15 Minutes of Finance, where in the next 15 minutes, I bet I can get you excited about investing. Let's do it. All right. Happy Friday, everybody. It is November. 2024 is almost over. Every year, every year it gets quicker and quicker, right? Time going by gets quicker and quicker. I remember when this old lady, I'm talking really old, like the old lady from Titanic movie old, where she's like 117, right? That lady, I remember, came up to me once, that level of lady, for sure was at least 100 years old, came up to me after church one day, pinched my cheek, which I don't even know how she was able to bend over to pinch my cheek, to be honest, because I was at least 4 years old, 5 years old. Yeah, you got to bend over to pinch a 4-year-old's cheek. She pinched my cheek and she held it so hard, really tight, really tight. And she said, enjoy the moments you have right now because time goes by quick. And I'm not making this story up. That was terrifying. Okay, that was I remember it like a horror movie moment in my life, where just this old lady came down, physically assaulted me, and told me to enjoy my younger years at 4 or 5 or 6 years old. I don't remember how old I was. I was young, okay? But it was traumatizing enough that I never forgot it. And I would say probably starting at 23, time started to really speed up. Like once I graduated college and I had entered the workforce, and I'm working 90 hours a week being a call slave and a coffee servant for the other advisors and investment analysts. That's when time started to, like, in the moment it goes by slow, but at the end of the year, you're like, holy cow, where'd this year go? You're like, holy cow, I've done 18 months of slavery for this financial firm. Like, how did it go by so fast? And I'm just thinking about that now. I know I just gave you a very unnecessary anecdotal situation about how enjoy your time now. Okay. I know I just did that, but it's just traumatic. Every time I look back and I'm like, man, what happened to the time? I feel like another year's gone. That's what older people feel. Okay. And I bring this up because a lot of you guys are probably in your mid 40s listening to this. I think, our demographics are fairly balanced. We have some already retired older clients and some really young clients, but most people are in that 30 to 50 range. And it feels like time goes by so slow. And then at the end, it feels like it goes by so fast. And investing is just like that. Okay. I have one client in particular who the last 5 years has been 80% of their growth. Okay. But they've been saving since they were 18. Okay. And that's how it works. It's that last 5 years. It's when time starts to go by really, really fast, where you're like, holy cow, I've made how much money? What did I do this year? Ideally you'll end up making more money from your investments than you ever would from your salary in that last 5 to 10 year range of investing. I wonder if that lady did that to any other child, by the way, or if it was just me. I wasn't particularly the cutest child. I don't know what it was. You know what it was? She was probably trying to scare me because I was such a bad kid. And I was running around, and only an old, ancient... You know what she looked like? She looked like one of the ants, the really creepy, skinny, tall ant from James and the Giant Peach. And I know you know what I'm talking about if you're a millennial. If you're not a millennial, just Google ants from James and the Giant Peach. AUNTS, the aunts. Oh my gosh, absolutely terrifying. Okay. And imagine her pinching your cheek. You would be traumatized too. Okay, enough about me, and just know it's the end of the year. Okay. And we'll blink. We'll take a couple deep breaths, and it'll be November of next year. Okay. We'll have a new president. The markets will be at even higher highs, ideally. And we'll be back here saying, okay, another year down. Let's go. We're ready for 2020. So it's 2024 now. So we're ready for 2024 or 2026, baby. Okay, enough about me. Let's get into the news. We had a really wild week of earnings, and we obviously had the election coming up. Guys, this is a big time of the year. And December is almost always a bad month for the market. November is usually not great, but it's okay. It's usually a buying month. So there's a whole bunch of stuff we could talk about today. Oh, and Nvidia, there's so many cool things. Well, they're cool to me. They're not that cool to you guys, but it's little news things that you guys would never know unless I was telling you because I'm in the weeds. But Nvidia is replacing Intel in the Dow. Okay, so now if you guys know there's indexes, right? There are three really big ones. There's the Dow Industrial Average, the S&P 500, which we love that here at 77. And then there's the NASDAQ, which is pretty much just technology stocks, but they're a little bit lenient with that classification. But the Dow is one of the most exclusive ones to get into. In fact, it is, out of the three, the most exclusive. And I'll read you guys an article about it, but that is a huge deal. Okay, Intel, everybody's heard of Intel. Intel is one of the trailblazers in the computer world, and Nvidia is taking their place in the Dow. The top 30, I don't want to say biggest. I think they are the biggest, but that's not a metric to get in. Like, there are big companies that don't make the Dow Jones, but they're very large, successful, blue chip, already have been in the S&P 500 companies that are now like, okay, you're booting somebody out of the top 30 and now you're in, which is, again, we love Nvidia here. We've loved Nvidia for years. This is a good day. Okay, let's read the news. Let's get you caught up. It was a good day, not a good week. So let's figure out what happened here. Stocks rose Friday as investors digested the latest results from large technology companies and labor market data that reinforced expectations that the Federal Reserve will continue cutting interest rates. The S&P 500 rose 0.4% Friday, while the Dow Jones Industrial Average and NASDAQ Composite added 0.7% and 0.8% respectively. Stocks recovered somewhat from sharp losses on Thursday, very sharp losses yesterday, that were led by a sell-off in tech stocks after a busy few days of earning releases. Thursday's downturn pushed the major indexes into negative territory for the month of October. By the way, that's the first time since June, maybe July, that we haven't had a streak of new highs or a positive month. So I guess new highs because we're already at new highs. So basically every month since July, it's been new highs. Okay, so 4 or 5 months of highs. That's pretty good. Let's see, where was I? It was the first time since July that the NASDAQ didn't record a monthly gain. The S&P 500 and Dow, meanwhile, had 5 months winning streaks snapped. Well, I guess I just stopped reading to tell you what they were already going to say. Even with Friday's gains, all three indexes finished the week lower. The NASDAQ snapped a 7-week winning streak, while the S&P and Dow suffered a second consecutive week of losses. The October jobs report released early Friday showed that the U.S. employers had added far fewer jobs than expected last month, while the unemployment rate held steady at 4.1%. The monthly report has taken on particular importance as the Fed recently expressed concern about the labor market weakening. The Fed, which cut its benchmark rate for the first time in 4 years in September, is scheduled to announce the decision on interest rates next Thursday. The yield on 10-year treasuries, which is sensitive to expectations around interest rates, was at 4.38% in recent trading, up from 4.28% on Thursday. Again, I'll just mention that's kind of a big deal. I know that's only 0.1%, but that's in treasury terms, that's kind of a lot of money. A lot of people probably bought treasuries once it went to 4.38. The benchmark yield, which fell as low as 4.22% just after the labor market numbers were released Friday, has been rising in recent weeks as market participants have recalibrated their thinking about how aggressive the Fed will be in cutting rates in the months ahead. Tech stocks spearheaded the move higher Friday, led by Amazon, which gained more than 6% after the company reported strong results driven by growth in its cloud and advertising businesses. Shares of Intel rose nearly 8% after the beleaguered chipmaker reported revenue that topped Wall Street's expectations. I don't think I've seen beleaguered in a long time, but that is a heck of a Scrabble word, and I might have to steal that. AI investor favorite Nvidia advanced 2%, while Microsoft ticked higher. Apple was bucking the tech sector recovery after its quarterly earnings came in shy of expectations. Apple shares slid 1.3% on Friday. Outside the tech sector, Boeing shares climbed 3% after the plane maker reached a tentative deal with its machinists union on a new contract. Geez, I don't know why that word confused me, but when I see machinist, I just think of Ex Machina. Is that movie? Anyways, sorry. Okay. It's Machinists Union on a new contract, potentially ending a crippling 7-week strike. ExxonMobil slid 1.5% and Chevron gained 3% after the oil majors released their quarterly results. Gold futures were slightly changed at around $2,740 an ounce, while rising just recently above 2,800 for the first time earlier this week. Bitcoin traded around 69,200, down from an earlier high around 71,500. Real quick, I do want to say that Bitcoin breaking 70 was a big deal. It's hopefully going to keep going up. When Bitcoin goes up, it just tends to be more cash flow. Obviously not in stock market cash flow, but just people being willing to spend their money, which I'm always a big fan of, just circulation, right? Things being traded. Okay. So lots of things to talk about here. First thing I want to talk about is we've spoken about this a few times about how Nvidia broke the market cap. They're either the first or second by market cap, which just means they're essentially their value, like the how do I describe market cap simply? It's really just the overall share value. Okay, so all of the shares pretty much added up, that's how much the company is worth. Okay, so the market cap is the total value of a company's shares. That's how I would describe it. So there's a theory out there, an investment theory, that you can't keep climbing. Okay, and it's like, oh, Nvidia's already at market cap 3 trillion or whatever they're saying. That makes zero sense. That's like saying Alexander the Great's already conquered all of Asia. He can't go to Africa. How can he go to Africa? It's like, well, what do you mean? He would just move to Africa. There's still more to do. Okay, there's more to do. And I don't know if I was right geographically on where Alexander the Great went. I have no idea. That was just the first analogy that came to my head. Unless you own everything, then there's still more to get. Okay, and the cool thing about Nvidia is that everybody uses their stuff. There's pretty much not a single technology company, or even just a grocery store or a bookstore, that doesn't have some Nvidia influence, because that's what all of the hardware has been built on these last 30 years. Okay, and it gets a little confusing, and I got to read this article about Nvidia going to the Dow before I forget. Darn it, I got in too many rants. But Nvidia is hardware. Okay, so that's like the boxes, the actual chips. And then there are companies that make software, and which is why we like a company called Palantir. Okay, Palantir is a software developer. They work a lot with Nvidia, and they're excellent. Okay, they're very excellent. That's not financial advice to invest. Just letting you know that that's a stock we watch, a stock we like, and a lot of our clients do own that, and they've been in it for a while. Okay, let me try to read this really quickly. Okay. Nvidia Corp will replace Intel Corp in the Dow Jones Industrial Average, illustrating a changing of the guard in technology and the downfall of what was once an industry titan. Intel joined the Dow exactly 25 years ago, according to Dow Jones market data. But the company has seen its status as a semiconductor powerhouse fade, as it hasn't kept pace with the latest trends. While many hot chip makers have it hit recent highs, Intel's record close dates back to 2000, and shares traded 69% below that point now. Dang. Intel's record close dates back to 2000. Intel's record close dates back to 2000. Sorry, I knew I was reading that incorrectly. And shares traded 69% below that point now. That's pretty brutal. And I own Intel. Okay, I've got people in Intel. I like Intel. I think they're going to get bought out. Okay, I think someone's going to buy Intel out and be like, look, you done your time, Grandpa. We'll take it over from here. Intel is a good company. They're just stubborn. They're just stuck in their old ways. Okay, I'll get back to reading now. The company's struggles have been on full display this year, with Intel forced to take nearly $19 billion in restructuring charges during the latest quarter as it seeks to right itself. Among the problem for Intel is that the company has missed the boat thus far on artificial intelligence. Management admitted Thursday that the company wouldn't hit its $500 million annual forecast for Gaudi AI revenue, which was already a modest target given what AI leaders are generating. I don't know what Gaudi AI revenue is. I'll have to look into that. Nvidia, by contrast, has become the poster child for artificial intelligence, with its shares surging about 850% over 2 years as the company has seen rapid growth in data center revenue thanks to its graphics processing units and help facilitating AI workloads. Shares of Nvidia are up 220% so far this year, while shares of Intel are down 38% this year. Nvidia's stock was up 2% in Friday's extended session, while Intel's was off about 2%. The Dow Jones Industrial Average has lagged the S&P 500 meaningfully this year, with the Dow gaining nearly 12% compared to a 20% rise in the S&P 500. Still, there is cautionary tale about indexes adding hot stocks on the heels of big runs. Intel stock, for instance, was a darling of the 1990s, but is off about 39% since it joined the Dow in 1999. According to Dow Jones market data, and the S&P 500 added red-hot super microcomputers, which we'll talk about in a second, earlier this year. But that stock has seen its year-to-date gains wash away as the company faces questions about its accounting, as well as pressures on margin. Okay, that's enough. We'll leave it there. That's pretty cool that Nvidia is doing that. We love to see that. I do want to talk about SMCI real quick. So super micro computer something or other. And I was looking at this company actually with my dad about a year ago. So about a year ago, we were talking about AI stocks, and he's like, well, have you heard about this SMCI? And I'm like, what are you talking about? And I looked it up. I think it was like $400, maybe $400. And right now it's at 26, but it's had stock splits. So it's hard to really say what it was. But let me just go to a year. So yeah, it was pretty much $300, $400 about a year ago. And it went over 1,000. And I told my dad, I was like, I don't think we should invest in this. I don't like this company. I don't know enough about it. He's like, no, I really like it. Let's do it. Luckily, he didn't do it. And it's not like I outsmarted my dad. My dad has excellent takes on 99% of things in life. But we just already had owned too much technology, AI stuff. We'd already had other companies. So looking at this, it was like, do we really want to take this risk? I didn't like it. But what ended up happening is from November of last year till pretty much, I don't know, June, it looks like, the company did really, really well. And then the stuff started happening. Okay. So I felt weird in November about a stock that continued to climb pretty much another 150% from where I had concerns. And now it's pretty much washed every single bit of gain away that it possibly could. And I think, let me look at so it's lost something like 75%, which is brutal. I bring that up because they're a chip company and they were competing at least November to June with Nvidia and with Palantir and with these other AI companies because it was a hot stock. And what came out is that the fundamentals weren't right. They have their financials are all in a mess. They have accounting people quitting. They're fibbing on their numbers. All of that stuff, once that happens, it is a huge just snowball effect down a hill avalanche mess. And I'm not even sure if SMCI is done yet. They might still continue on their way down. But what I noticed back in November was I was like, I've never heard of these guys. I'm not seeing a lot of things in their quarterly reports that I'm like, wow, they're doing that much business. One of the issues when you're trying to grade a company's business strategies is you can't see always, it's not always public news, who they do business with, right? Like Nvidia does business with so many people, so you'll never really know who they do business with. You won't be able to pinpoint it. But with someone like SMCI, or I'll use SoundHound, for example, love SoundHound. Well, SoundHound in their quarterly reports is like, look, we're doing X, Y, and Z for ABC. Like they're proud to talk about who they're working with. SMCI didn't do any of that. It just seemed very like, look at us. Like look at all we're doing instead of, hey, this is what we're doing, this is who we're doing it with, and this is how we're doing it. It was just a little bit too much of the flaunt and show, and not enough of the X, Y, and Z of what's getting them there. So that was the reason that it turned me off. Now, again, that strategy, it's my gut. It's my gut telling me, I don't really like that. Now, there's fundamental analysis behind it saying, hey, look, I like companies that show me who they're doing business with, and you're not, so I don't really want to put money in you. But it's still a little bit of my gut. And I tell you that because everybody's going to have different strategies. Everybody's going to have different philosophies. But sometimes it takes a year, okay, November to June. So what is that, 9 months? Sometimes it takes the length of a pregnancy to figure out if the investment was good or not, okay? And luckily that was one that we avoided because I do not like buying and selling. I like buying good companies and holding on to them through the drama. Obviously, if the story changes, like if SoundHound came out and was like, "Hey, we're no longer working with Papa John's, Chipotle, Church's Chicken, Five Guys," then I'd be like, "Ooh, those are part of the reasons why I really like SoundHound. So maybe I need to rethink our position." But obviously, the story has stayed the same. Story's been good, so we're sticking with that. And that's how we value pretty much every stock we hold, which, again, we don't hold a lot of stocks, less than 10, okay? Maybe there's 12 because we did do one a month this year. But we really try to keep it below 10 to 20 positions where we're like, we like these companies. And the reason we do that is because we want to really know what we're investing in. Okay, we want to really, really know. So most people don't need that. You need the S&P 500 and you need one or two stocks. Most of the time it's your own company's stock, okay? And you hold that for 30 years. But when you really want personalized advice, it helps to be with someone who has a strategy behind what they're thinking about. And that's the best part about it for me is I love being in the weeds. Like when I found out Nvidia was going to be in the Dow, I was all giddy this morning. It was like 4:30 a.m., right? I'm like still in bed. I'll get up at 4 a.m. and I'm in my bed just reading articles till like 5. And that's crazy. Who does that? Like I get up and I'm like, ooh, what do we have here? Like what is the new thing happening? So I get excited about that. I hope you guys do too. I am 7 minutes over my time, which is disrespectful. And I owe you guys an apology. Okay. I am sorry for keeping you here this long. If you're even here this long, guys, I hope you enjoyed today's episode. Some fun stuff happening. We got an election on Tuesday. Let's, pray, put our hands together, and just hope everything goes well, regardless of who gets elected. Okay, let's go out there and just try to be the best version of ourselves and make some money along the way. Okay, that's it for today, guys. As always, invest early, invest often. We'll see you next week.